In this video, I'll take you through all things personal loans, including what they are and how they work, how much they cost, what to consider when looking at the right personal loan for you, and how they compare to other kinds of borrowing like a credit card. Let's take a look. A personal loan is a fixed lump sum of money you borrow from a lender, which you then pay back with interest over a set period of time, typically in monthly repayments. If you're not sure what interest is, click up here and follow the link below for our Interest Explained video. As the name suggests, you can use your personal loan for a variety of more personal purchases, like a wedding, home renovations, or consolidating your debt. Loans tend to fall into one of two buckets, secured or unsecured. A secured loan is one that is attached to a valuable asset that can be used as collateral if you fail to repay the loan. A mortgage is a good example of a secured loan, where your loan is secured against your property. With a mortgage, if you don't repay your loan, your home could be repossessed. Personal loans are unsecured, which means they aren't secured against a particular asset. However, if you fail to make your repayments, you could still be charged a fee and your credit score could be impacted. The main advantage of a personal loan is you get your cash up front and can then pay it back in installments over a set period of time. The cost of a personal loan will be unique to you, depending on a number of factors, including how much you borrow, how long you have to pay it back, and what interest rate the lender gives you. Your lender will calculate all of that on a variety of other factors, including income and your credit history. So before you even submit an application, it's a good idea to assess how much you can realistically afford to borrow and review your credit report to see if there are any ways you can potentially give your credit score a boost. For example, lowering your credit utilization ratio, which is the percentage of money you have borrowed against your credit limit. For example, if you spend £300 with a £1,000 credit limit, your credit utilization ratio will be 30%. A lower ratio could potentially boost your score, as can other factors like registering to vote. Click here and follow the link for more potential ways to boost your credit score. A personal loan is typically paid off in monthly installments, so review or create a budget in advance to see what you can afford to pay each month. Finding the right personal loan for you can be overwhelming, so we recommend using these 6 features as a checklist to review your shortlist of loans. First things first, do you qualify for the loan? If you don't even meet the eligibility criteria, it's a waste of time to keep researching the loan. Most, if not all lenders, offer a free eligibility checker, or you can click here and follow the link to our personal loans guide to start comparing personal loans using our handy comparison table. Next, consider the loan amount. Can you borrow the amount you need and afford to pay it back in a reasonable amount of time? Consider if the loan comes with a competitive interest rate. Is it fixed or variable? Most unsecured personal loans charge a fixed interest rate, meaning your monthly repayments will stay the same throughout the loan. Remember that the advertised rate is not necessarily the rate that the lender will offer you. Lenders will look at factors like your credit score, borrowing history, income, and expenditure when deciding what rate to offer you. After the interest rate, think about the loan term, so how long you have to pay it back. You want to find a good balance of affordable monthly repayments over a reasonable period of time so you don't end up paying loads in interest over a really long loan term. It's super important to look at any fees your personal loan has. A few lenders will charge an arrangement or a setup fee, for example. Finally, consider the repayment options, specifically if you can make repayments early or overpay without being charged. Most lenders won't penalise you for paying back some or all of the loan early, but you may still be charged some interest, so make sure you look into the T's and C's and do your calculations first. The question of whether you should get a credit card or a personal loan is one that often comes up when we talk about borrowing. And the answer really depends on what you're buying, how much you're borrowing, and your self-discipline. Personal loans come in a lump sum with fixed repayment terms, whereas credit cards are a revolving form of credit. You borrow what you need when you need it within your credit limit, with a minimum monthly repayment required. Personal loan interest rates tend to be fixed, whereas credit card rates tend to be variable, unless they come with a fixed promotional introductory rate. Credit cards can be a more cost-effective option for borrowing sums under £5,000, providing you have the self-discipline to repay it. Unless you have a good credit score and high income, credit cards typically won't give you a limit of more than £3,000 to £5,000. Above £5,000, and personal loans should be a cheaper option. Using the wrong credit card could cost you more because credit cards tend to have higher interest rates than personal loans. However, a card with a promotional rate of 0% on purchases could be a smart option if you have the credit score to get approved. Click here and follow the link to find our roundup of the best 0% purchase credit cards. Finally, consider any fees like application or setup fees or monthly or annual account fees on a credit card, whether there are any offers available, and the length of the application process. Speaking of the application process, in the next section we'll look at what you might need to apply and how you can give your application the best shot. In order to lend you the cash, a personal loan provider will need to see proof of identification, proof of address, and proof of affordability. And you can choose to apply online or by going into a physical branch, depending on the lender. There's no way to guarantee you'll get approved, but you can improve your chances by doing a little personal finance assessment and spring cleaning in advance. This looks like making sure you can actually afford to borrow and pay back the amount you're asking for, demonstrating a positive banking history, building a good credit score, and contributing to your savings regularly. All of which shows lenders you are responsible and likely to make all of your monthly repayments. For more information on personal loans and to start comparing the right borrowing option for you, click this link here and follow the link below to our guide on finder.com. If you liked this video, like, subscribe, and hit that bell button to be the first to know when the next video drops. Thanks for watching.